Good day, all. Today we're going to start up the series I'll be doing for pivot points. This initial video isn't going to be too much into how to use them again. Just like my FIBO series, I'm trying to give you the basics so you understand what the indicators are or the levels. And I'm not going to be going too much into on how to use them. I want you to understand what they are. This will probably be a three-part series also. It will basically just show you the difference in the pivot levels, how they are, and how they're I guess you could say calculated. Um, I did a brief video on this website that I'm using to where I got these numbers from as an additional tool for trading. The idea here is I'm going to be going through several of the most commonly used indicators, and then at the end I'm going to put it all together in one forum blog so that you can go through and basically build your own system for trading. Pretty simple, but it'll be a nice way to trade and hopefully give you some pretty good setups that are reliable. So let's get going. Pivot points. Basically what a pivot point is it's a formulation of, for instance, the base pivot point. If you look on the chart, the pivot point is normally, except for in the case of Camarilla, it's the middle ground. Then we have support 1 and resist 1. So what is a pivot point? They're support and resist lines. Price will tend to reverse off these, or if you're trading Forex, it's a good point to exit out of a trade. Sometimes it really just depends on what the market's doing and how you're using them. But as you can see on the screen, there's 5 different pivot points. I'd say the most common one people use. If we look, there's Forex pivot points, Woody pivot points, Fibonacci, DeMark, and Camarilla. So I plotted each one on here so you can see the difference in how they are. They all start off, the basic pivot points, they start off pretty close together, but if you look as we plot them out, the resist and the support, they then start to vary. It's going to be up to you to decide on how you trade. So if you're using a Fibonacci-based system, you might want to use Fibonacci pivots. If you're going strictly price action, then a Forex pivot might be best for you. If you're using a Itchy system, then these Camarillas might be. It all depends on how you are going to decide in the long run you're going to trade. There's indicators out there, which in the third video I'll be giving indicators once you understand what support and what the pivot points are. How the pivot points will just draw these for you, so there's no reason you have to go into this website each day and then go down here and manually plot these on your chart. But if we look, for instance, I don't know how good of an example this will be, but for instance, here's FIBO resist 1. You can see how price tends to gravitate and stay around it. Pivot points are a great way to trade. They're one of the simplest to do also, especially when you have an indicator that will draw them for you. But again, I wanted to, just in this video, point out the different types of pivot points there are, because you need to start thinking ahead as you decide you're going to trade on what type of system you're going to use. And if you are going to use pivot points so they complement the system and mesh well together, you wouldn't want to use Camarilla if you're trading FIBOs. You wouldn't want to use Woody if you're trading, I don't know, pure price action. It's just you want things to mesh together like the cogs in a clock. So basically for this video, it's going to be kind of short. We're just going to show you the different types of levels. The next video I'll go into, we're going to discuss more what indicators you would use with each type of pivot level to help you decide in the long run what kind of system you want to put together and how you want to trade in the long run. What you're doing, like for me, just to explain it a little bit further, I like to trade divergence. So I use FIBO pivots on my system. They work extremely well with me, and a lot of times, as you can see, the most popular pivots, in my opinion, are FIBO and the Forex pivots. And you can see a lot of times these line up. In this case, FIBO and Forex on resist are pretty far away, but the support, they were the exact same. If you think in the mass mind, as in the markets, Woody, DeMark, and Camarilla, yes, they are excellent pivot points, but from what you can see and from my trading, I really see that price responds better to the FIBO and the Forex pivot points. Not saying that's the way you want to trade. A lot of people have their mindset on how they want to trade. But as a beginner, or if you're new, I would definitely consider maybe using a FIBO or a Forex pivot, because they do often line up together, which creates confluence, which basically makes your trade have a stronger reason for reversing or continuing. You just want to make sure and be aware. That pretty much sums it up. I mean, take a look. You can see how some of them line up, how some of them don't. Well, next week I'll be getting into the next video where we'll go a little more in depth in this. But for now, I just wanted you to see how they look, all of them together on one chart, how they are figured out. And basically, the way they're figured out is it is all based on high, low, and close. So for a pivot, for instance, let's go to Fibonacci pivot points. A Fibonacci pivot point, the base pivot is high plus low plus close divided by 3. And then Fibonacci starts using Fibonacci ratios. That's why they differ from Forex pivot points. A Forex pivot point uses the pivot as the formula. So R1 equals 2 times the pivot point, and the original pivot point was figured out the same way as the Fibonacci. Now if we look to DMARC pivot points, it's open, high, low, close equals the high and low, and then from there the formula gets a little different. But you can see how each one has a different formula. Cameroid is high, low, close, so that gives us the same as a Forex and a FIBO, but then as we get into R1 and S1, the formula differs on how it figures out resist 1, support 1, resist 2, support 3. So as you can see, a lot of them start off with the basic same formula, high, low, plus close, divided by 3. But from there, then they vary a lot on how they are figured out. So again, think of how you want to trade. If you like Fibonacci levels, if you like support and resist levels, if you just like pure price as a technical trader, overbought, oversold. Next video, we're going to get into each one of these indicators and which works best with which. So if you like to buy overbought, oversold, then there's some indicators out there that will complement, say, a Forex pivot or a Fibonacci pivot. But for now, think about how you plan on trading. And next week, we'll go into which one of these indicators works with other indicators that complement them and how they can work for doing either a trend following system or a reversal following system. Hope you enjoyed the video, and we'll see you next week when we get a little bit more into this.